joins in right now on the show. He's head of research at Asia at Julius Baer. Mark, thanks so much for taking the time out and being with us. Yet another conflict, and one which the timelines predicting how long it lasts might be a futile exercise, but it involves a nation which is thick and center of the whole oil trade for the world. How do you see the implications of this near term and medium term? I'm presuming predicting long term is very, very difficult.
If we look near term, you can study what the S&P and the oil price did after the US attacked various countries. And if you go back to the first Gulf War, 1991, strange but true, a week later, on average, the S&P was up and the oil price was down. I can't really explain it, but that's the data. A longer term, if I was to say 12 months out, with these kind of events, really it is about whether they have an impact on the economy or not. There are about 40 major political events that we can study that have happened since World War II. And it's pretty clear that the ones where there was an economic impact, the market went down. And if there wasn't an economic impact, then the market didn't go down. For example, President John Kennedy was assassinated in 1963. A terrible thing. But 12 months later, the S&P was up about 25%. There wasn't an impact on the economy. Now, 10 years later, 1973, the Yom Kippur War, 12 months after that, the S&P was down 45% because of the OPEC embargo that followed the Yom Kippur War. So what I would say is the same holds true today. If this has an economic impact, the market will go down. And if it doesn't, it won't. I don't think it will have an economic impact. I have no huge basis for saying that, but it's my strong inclination.
Mark, let's go a little into detail on what the expanse of that economic impact could be on various asset classes. Let's start with crude. That's the front and center and obvious one. Will the fears of oversupply eventually drown out concerns of supply constraints in the shorter term, whether it is with the blockages in the Strait of Hormuz or whether Iran's oil supply going offline is another one of those concerns?
Yes, I think so. I mean, the oil price is already showing you that people don't think this is going to be a long-term problem because, what is it now, $75, something like that? You may recall when Russia invaded Ukraine, it went up to $120. So the market thinks that that the supply is big longer term. And by the way, inventories are very high in Asia and in Europe. Europe also, through the Red Sea and the Suez Canal, has a direct connection to Middle Eastern oil. The fact that I want to say the Straits of Hormuz are shut down, obviously, but that there have not been attempts by Iran to destroy the oil and gas infrastructure of the Gulf nations in the Straits of Hormuz, and the I should say the Persian Gulf is, I think, a sign that they're not going to. I think they probably would have tried by now if they were going to. And that was the major concern. Less so an actual closure of the Straits of Hormuz, which has never happened before. There's hardly anything going through there now, but that's really because of the skyrocketing insurance prices and not what the Iranians are doing.
Mark, good morning. So we're talking about crude. How are you looking at the resilience in terms of Asian markets, if you have to specifically look at India as well? Because are we seeing a reset and rebalance right now? And is the view going to be that probably then this will be an opportunity to buy on dips and start building from here on?
I doubt there's a whole lot longer term that will come out of this that relates to India, except if, I want to say, and it's a distinct possibility, Iran becomes eventually a U.S. ally and really ramps up its production, which of course could be very big. And the U.S. would be directly and indirectly controlling about half the world's oil output. And Trump wants a low oil price. Then if you have a low oil price, of course, that's good for India. But my sense is that the relationship between the Indian stocks and oil price vanished a long time ago because the country's become much more efficient. The economy's become much more efficient. So I don't see really this being anything that relates very directly to the Indian stock market.
Mark, just one more question. And I understand you might be short on time, but the 2025 and the year thus far of 2026 has been marked by superb performances by the AI-led markets or economies of Asia as well, Korea, case in point. But having rallied so much so quickly, could there be a pause due to valuations or due to hyper growth not looking so strong ahead? And therefore, could global funds move out of some of these nations or go slow into these and go into the other markets which haven't performed at all for the better part of 2025, relatively, let's say, like India?
Oh, the short answer is yes. I think Korea is extremely overbought. The deviation from its 200-day moving average is the most extreme it's ever been. I don't remember the number, but I think it's upwards of 30%. No, much higher than that, excuse me. I just don't recall right now. But anyway, Korea is extremely overbought. People have lost sight of the fact that memory chips are essentially a commodity. Their prices go up and down. Their prices are up 50% this year, which is why Korea's done so well. Samsung Electronics and SK Hynix, pretty much 100% of their profits are coming from memory chips now. But those prices I don't think can stay high forever because eventually you'll get demand destruction from the traditional buyers like an Apple or a Nintendo or a Dell or an HP. They'll simply not be able to buy so many memory chips, or they'll find workarounds. So anyway, yeah, I think Korea is extremely overbought. And I do think that India's had a nice time to trade sideways and become less expensive. And I just feel that India is a story that remains what it is for many years to come. It's a very good long-term story. So I'm not fretting about it. And yes, I think it can do well.
Mark Matthews, understand we have to let you go, but thank you so much for joining us for this quick but very informed interaction. Really appreciate your time.
Thank you.